Hi, good evening, everyone. Welcome to my live stream. So, I actually want to show you how to trade the. So, I want to show you how to trade the live stream, how to use the trading view for the. Now, yesterday, while I was actually having some live session with my ongoing mentorship for a CRT masterclass. So one of the students brought up something. Please, if you are hearing me, can you drop in the comment section? Let me know where you are watching me from. One of the students actually dropped that, okay, he dropped a very significant point, which I decided to address. And what he said was that he noticed some kind of discrepancy in the in the chat that I was sending and what he has on his MT5. So I just smiled. I was like, wow, of course it will be like that. Of course it's going to be like that. So because it's always like that. So that's one of the difference, one of the major issue setbacks we've been gotten from Derry over some years now. But finally when they heard our voice and they decided to make everything easy for us, so they integrated the trading view into their platform. So personally, me, I prefer to trade on trading view than to use the normal MT5. Why? Because whatever you see there is 100%. Whatever you see there is 100%. Whatever you see there is 100%, and you have factual facts to work with, as in real price, not just an extra, just like assumpted price movement in the market. So if you look at very well on my chart, this is crash 500, right? So now when we talk about CRT, is a very deep strategy, and what I say, it's easy to understand, but you need to put in a lot of effort. It's a strategy that once you understand it, my brother, you are good to go. You are good to go. But it really take a lot of practicals. A lot of practicals. You need to observe price. One thing about CRT is it brought in the fact of we using time and price. Time and price. So before we came about the life of CRT, as a matter of fact, if you study your ICT very, very well, most especially the monthly series mentorship, at least I can tell you, if you study the month 4, that's where you talk about day trading, scalping. Then if you talk about watch about the month 9, month 10, month 11, month 12, you understand these things very, very well. You understand this thing very, very well, because it's really dealt with it very well. As in, there is nothing new in the trading industry. There's nothing so special there. You just need to understand yourself. So the same thing that work on currency pair, once you understand how to read price in advanced way, mechanical way, trading become easy for you. You can trade anything in the financial market, so long the asset has a candle, it has an open, it has a close, it has an high, and it has a low. You can trade anything in the financial market, be it stock, be it cryptocurrency, be it currency pair, be it synthetic, anything you can think of in the financial market. So long that thing has a what? An open and high, It has a open, it has a high, it has a close, and it has a low. You can trade it because it is same thing. I keep telling you that it is repetition over repetition. That's just the trading industry for you. Repetition over repetition. There's nothing new. So in the trading industry, we have what we call the weekly cycle. We have what we call the monthly. We have what we call the yearly cycle. Let me start from the highest, the yearly cycle. And for you to understand that the yearly cycle, you need to think like the big boys. When I mean big boss, the financial institutions. Now, a practical example of financial institution is your banking industry. Now, if you look at the bank very, very well, the day I got to know this thing, though I learned with my hard-earned money, like they paid me massively, and I tried to the next time they show me shege. But the following period, I now realized what happened the first time. And since then, their father. They are what? Their father. So in the banking industry, you'll notice one thing your bank will tell you that they have quarterly shift. In the sense that first quarter of the year, second quarter of the year, third quarter of the year, fourth quarter of the year, those are not just play. If you understand that thing, now big banger. Big banger in the sense that now when we talk about yearly candle, that is how the candle will be. So we have the first quarter. The first quarter might be for accumulation. It's always going to be your accumulation. We have first quarter, second quarter, third quarter, and that's it. So from the weekly, from the monthly, from the yearly time frame now, we now move down to monthly time frame. From the monthly time frame now, in the monthly cycle now, so the quarterly cycle and the yearly cycle. Now for the monthly cycle now, we now have what we call the first week, the second week, the third week, and the fourth week. That is how it is. Power of 4. From the monthly time frame, we move down to the weekly time frame. Now on the weekly time frame, now we now have what we call the weekly open. We now have what we call Monday, Sunday, Monday, Tuesday. There are things you expect those days. Tuesday, Wednesday, there are some things you expect in those weeks. Those are the way we categorize the words. In this situation, for a bullish week or a bearish week, by Tuesday or Wednesday, we expect the high or the low of the week to have formed. Then from the weekly time frame, we now move down to our daily time frame. So when we now want to simplify everything in our daily time frame, that's when we now talk about the what? That's when we now talk about Asia, London, New York, and all those things. There are ways you identify them. Then from the daily time frame, I will now move down to what? We'll still simplify it down to what? To the 4 hours time frame, and that is where we now have our what? Our CRT. And that's how we came about the CRT when we talk about 159, 1 a.m. candle, 5 a.m. candle, and 9 a.m. candle. All these things are not just there. There are reasons why they are there.